Hello everyone. Today our topic is about tax, the classification of tax and how to solve this question by consumption function. So yeah, this is not some difficult question, but yeah, I will just tell you some more. Firstly, the first step, we just need to read the question and find some keywords. It's easy to find that the tax is a sales tax, and different consumers buying the same product have to pay the same amount of tax. It asks us that what kind of tax is this? Firstly, we just need to learn some different types of classification of tax. Firstly, according to whether or not the producers or someone can pass the tax on to someone else, we can divide tax into direct tax and indirect tax. For example, income tax is direct tax, and something related to sales or service or goods is indirect tax. So sales tax, value-added tax, definitely is an indirect tax. We can easily exclude option A. And then what's the difference between option B, C, D? It's also very easy. It's just some very basic knowledge in IGCSE. And then here's something I wrote by myself. We can record this basic knowledge. If income increase, what will it cost the change of tax payments divided by income? Firstly, if it is this fraction increase, then it is a progressive tax, and if it's remain the same, then it is something called proportional tax. Something like this. Yeah. This is your income. I write it as Y. And this is the tax rate. Something like this is this. Maybe something like that. Okay, it's okay. And if the fraction, or we can call it tax rate, decrease, then it is a regressive tax. And then how can we connect this basic knowledge to our question? It's told me that the standard rate for value-added tax, sales tax, is 20% in the country. So we can rewrite this as consumption multiplied by 20%, the tax rate, divided by income. I write Y to represent it. How will it change if Y increase? We can also rewrite it as like this. And then we also need to learn something called consumption function. Consumption function is like this. C stands for total consumer spending. Okay, maybe you will learn consumption function equation in like chapter household. Yeah, you will learn something about spending and disposable income at that chapter. A stands for required purchase without disposable income. Maybe we can also call it as autonomous consumption. It's something that will not change because of the change of income. Maybe it's the purchase of necessity, and so it's always larger than 0, and then plus MPC multiplied by income, disposable income. What is MPC? You may ask me these questions. It's also not so difficult concept. It's called marginal propensity to consume. It is a proportion of disposable income a consumer decides to spend on consumption rather than saving. When we talk about MPC, marginal propensity to consume, we will have an assumption that if you gain income, you will only use it either to consume it or to save it. So I can give you a really simple real life example. If your income, your disposable income increase, maybe let me see, say $1, and your MPC equals to like 0.75, and then it means that you would like to use $0.75 to consume and use 0.25 the remaining part of your increasing income to save. Okay, so to be honest, I usually write consumption function as this. C equals to C0 plus C1 multiplied by YD. And then what we want is C consumption divided by income. So we need to rewrite this equation. Just divided by income disposable income, and then C1 is MPC. It won't change in this question, and C0 is also won't change, and YD is increase. So this fraction will decrease, which cause this fraction, consumption divided by income, also decrease. So we can connect this together, and the tax payment divided by income is also can call tax rate will also decrease. So we get our answer is a regressive tax. That's all.